JBlog, 8th of May 2010. It's been a couple of weeks since I've posted a blog, and of course a lot has happened in those 2 weeks. And of course the excitement was all last week, this drop here. The 1st of May looked pretty strong, and it looked like there was going to be some further upside. That happens frequently on the 1st of the month because there's new money that becomes available at that point. But of course the last 4 days after that have been quite the drop. Very significant, makes headline news. When we look at it from a weekly point of view, it really isn't that big. Like, it isn't anywhere close to what we had back in October um, of last year, and before that we had much larger drops. So it isn't really the big a deal. Question is what comes next, and that of course is on everybody's mind. What is Monday's market going to look like? There is a couple of scenarios that I'm painting at this point. One of them is a 1987 type of market correction, because it could very well be possible that a lot of people look at this on the weekend and they just think to themselves, I don't want to be here. So Monday morning they phone their broker and they just say, sell. That could happen. Then again, a lot of money is now in the hands of professionals and professional money managers. So I'm not sure exactly how much money is still in the hands of individuals, and money managers seem to be the buy on dips crowd. They just figure that no matter what, you always buy. That seems to be the prevailing wisdom on Wall Street. A dip is always a good time to buy, until of course something like this happens. But nobody ever assumes that something like this will happen. Interesting things that are happening right now. One of them is the TED spread. I talk about the TED spread quite frequently. And the TED spread has spiked, which is basically nervousness between banks. Once again, we're in a situation where nobody knows what bad collaterals the other banks are holding. This is, of course, all related to Greece. Greece is sort of the trigger. It's not big enough. But the big countries, of course, being Portugal and Spain, and then further down the line we've got the UK, the US, and of course Japan as being wild cards. Nobody knows how good the bonds really are, how long they will hold. And this TED spread tells us that basically the market does not believe that what the European Union and the IMF is putting in place is actually going to stop this. Which is an issue. There is over $1 trillion there, potentially, that could go wrong. And if we throw Japan into that formula, there'd be even more in the UK and a few other ones. Could be quite a mess. There was an interesting letter by Malden. John Malden, you really do want to read this one. It's called The Future of Public Debt, and it talks about a piece published by the Bank of International Settlements, which is basically your central banker's central bank, and they are painting a rather bleak picture of what we have coming down the road in terms of governments indebting themselves. In my mind, this is basically what's happening is governments are running up huge debts, and they are simply spending that money trying to revive the economy. Basically, they're trying to spend their way out of debt. It does not work. My 11-year-old daughter knows that you cannot spend yourself out of debt. I don't know why people on Wall Street or our politicians do not know this or do not want to know this, but they don't seem to, or they don't seem to care. Here we're looking at oil. Oil had a major drop. It went, of course, from the high 80s to the mid 70s, and gasoline dropped along with that. That is good for the consumer. Lower gasoline prices. There probably was a huge amount of speculation there in futures, and that story that is posted about that whoever wanted to sell 1 million and sold 1 billion, that's for all I'm concerned, that's a BS story. That would not cause something like this to happen. Yes, there are mistakes that happen, but there is enough safeguards in place. This is simply a market that was completely overpriced, completely leveraged to the hilt, and something small came along and basically destroyed a lot of these positions, and it just folded in upon itself. Lots of sell orders. Now gold, people are heading into gold, people are heading into silver um, as means of escaping both the equities as well as the currencies. Both of them are seen as suspect at this point. The VIX has had a huge spike up, so there's lots of worry here, and of course options. People suddenly say, "Ooh, we want insurance." Where were you 5 days ago, right? I mean, nothing has changed, but this is just. I refer to it as we the sheeple. CNN says everything is fine, CNBC says everything is fine, and therefore everything must be fine. I mean, look at the fundamentals. There's nothing fine about this. Unemployment went from 9.7 to 9.9. That's U3. That's just who's collecting unemployment insurance. And those unemployment insurance have been extended again and again and again. But if we look at U6, which is the broadest unemployment statistic, we actually have 17.1% unemployed. That means 1 in 5 people is basically not working. That could be working or is underemployed and would like to work more. U4 at 10.6, which includes discouraged workers. People have basically given up trying to look for a job because there's nothing out there. Um, uh, where's this recovery? I mean, exactly where is it? It's in earnings. Major corporations, of course, have good earnings because they're exposed to an international market that is still buying American goods. Do keep in mind that 1/4 of those exports are bought by Europe. Um, if we really get into a situation where Europe is in trouble, and it looks more and more like that is going to happen, in a major way, then 1/4 of the US exports could potentially be an issue. BRIC nations at this point, so China, Brazil, India, and Russia, are accounting for something like 2% of our exports. Very, very little. So whether China is buying or not buying really makes no difference to US bottom line. Um, the talking about the China index, I have it over here, and it doesn't really look that great. I mean, this is the nation that's supposed to lead the world out of the recession. Look at this downfall here. The Chinese have a major real estate bubble on their hands. They've been building buildings like crazy. There's nobody living in these buildings. They've been building factories. They've got capacity. Nobody needs these goods that they are able to make. They're just trying to basically keep everyone employed and happy. Otherwise, they'd have a revolution on their hands, and that will potentially happen at one point. Actually, I do expect it to happen sooner or later. Um, they're just biding their time right now, but this is certainly not a very healthy index. Currencies, of course, this is the euro, big story. The euro has dropped to 127, 126. The US dollar has shot way up, which is also going to hit US exports quite significantly. I mean, the US dollar is, just bring up a chart, it's had a huge run since things went better here, and therefore US goods are once again much more expensive than they were. And that is going to hit the bottom line. Anyways, that's all I have for today. It'll be interesting to see what's going to happen tomorrow. I am certainly being very careful, and I'm not buying on dips here. But then you probably expected that from me. So have a good weekend, have a good week, and hope you make lots of money. All the best. Bye.